So good afternoon, everyone, and thank you for joining Lakehead University's virtual speaker series. Your video and audio is automatically disabled by default, and at no time is your video or your computer screen accessible by the moderator or presenters or others taking part. Also, just a reminder that this webinar is being recorded. After the presentation, there will be time for question and answers, and during that presentation, if you think of a question, you can send me a private message. As we begin today, I would like to acknowledge the original custodians of the land and pay my respect to the elders, past, present, and future, for they hold the memories and the traditions, the culture, the hopes of Indigenous people. I would also like to recognize that the Thunder Bay and Aurelia campuses are on the traditional lands of some of this country's Indigenous peoples. In Thunder Bay, Lakehead University resides on the traditional land of the Fort William First Nation, signatory to the Robson Superior Treaty of 1850. In Aurelia, Lakehead University resides on the traditional lands of the Anishinaabe people and the Rama First Nations. We also acknowledge the history that many nations hold in these areas and look forward to respectful relationships with First Nations, Métis, and Inuit in the spirit of reconciliation. Now it's my pleasure to introduce to you to today's speakers. Jarno Known, he's a mobile mortgage specialist born and raised in Thunder Bay and a graduate of Lakehead University's 1999 program Bachelor of Business Administration. He's approaching 30 years in the banking industry, 25 of which were with the TD Canada Trust. Shannon Wagner is the Senior Financial Advisor and has been with TD for 24 years. She's currently working with the Thunder Bay County Fair Branch as the Senior Financial Advisor and a graduate of Lakehead University's Honor of Bachelor of Arts degree in Sociology and Bachelor's degree in Political Science. Finally, Chantal Boutot, a Confederation College alum working for TD for 5.5 years in the roles of financial advisor. She's a two-time Champion Award recipient at the here at TD and prides herself with giving sound investments and real estate lending advice while delivering legendary customer service. I'm now going to turn the speaker off to Chantal, so take it away, please.
Hi, everyone. Thank you for attending and welcome to our video. This is all about first-time home buyers, so it's super beneficial to probably almost everybody at some point in their lives. The first section here starts off with before you make an offer. This is, should I rent or should I buy? Renting does require less upfront costs, stuff like that, and fewer responsibilities, but it does come with a different range of costs associated with it. So you get to own an asset when you have your home and you're owning your home. You have a potential to increase value and everything. You have potential tax credits and deductions, and you also have pride of ownership. I personally own my home, but I've also rented as well. And I think it's all part of the journey and it's whatever works for you. And you can reach out to us anytime at TD. We're here to help with renting or owning. So buying a home, it's a big commitment, and make sure you really want to and you can really afford buying a home, because it is expensive. But once again, it's all about responsible lending at TD, and we're not here to lend you more than you can afford. When we lend to you at TD, you have to qualify under certain interest rates, and there's certain income guidelines and stuff, and we're going to get into all that during the presentation. But we're going to make sure that you're financially able to afford the home and be in a great income area that suits you. If you're sure you're ready to buy a home, you can ask yourself some questions to kind of figure out what works best for you. Where do you want to live? What kind of neighborhoods do you like? Do you want to be close to schools, transit shopping, etc.? What kind of property do you want? For example, a house or condo. You can own a condo, you can rent a condo, you can own a house, you can rent a house. Existing properties are new. So there's tons of different features. I like to always tell people, what makes them happy and what really expresses joy within themselves. I think that's always the best option to talk with the customer, a first-time home buyer first, because if you're really set on a certain area in town, then stay to that certain area of town. You'll find a list of things that your must-haves, things that you can budge on, and things that you do not want. So there's a lot of lists, a lot of choices out there, and we're here to help at TD from the start. How much can you afford? Owning a home can cost a lot. It's a lot more than you might expect. We're here to help with the budget at TD, and we also do what's called a personal assessment. We collect your assets, your liabilities, And we also talk about what is actually in your budget. We're here to help with all of that. So we have to talk about mortgage payments, property tax, maybe condo fees if you're purchasing a condo, home insurance, all your utilities, so water, hydro, gas. And then it's always good to have an OOPS fund, I call it, an emergency or maintenance cost fund. We have a couple different products to be able to support a line of credit through your home as well, which I think we're going to touch base on too. I know it's a lot to take in and there's lots of questions, but this is just kind of an overview presentation, and you'll have our contact information for after as well if you want to get in contact with us. This is just an example budget. We have a mortgage payment here for $1,200, property tax for $3, condo fees for $250, home insurance at $100, utilities in general, and then $100 for an emergency fund. So in this case, your $2,200 a month would be enough to pay for this home's monthly cost, which is great. So if that's just your homeowner and your home budget, perfect. But we also have to take into factors gas for your vehicle, vehicle payment, vehicle insurance, food. Everybody needs to live. And you know what? It is nice to have some mad money, to have a couple bucks left over to be able to spend on. In my situation, it's a Starbucks coffee. So I need to make sure that I can afford my coffee if I have this house. Down payments. So the down payment is basically just to start off or initial amount of money you contribute to the buying of your home. Minimum required is 5% for properties that are $500,000 or less. So in many situations where you're purchasing your first home, it is going to be under that $500,000 mark. But the markets are crazy right now too. And you know what? Lots of people are holding off, waiting, and maybe their first purchase of their home is over $500,000. And that would require a 10% for anything over that for a down payment. So you have to come up with that cash yourself. It can be gifted to you. It can be saved in investments or a savings account. When it is saved, it does need to be, or in your investing account, it does need to be in there for 90 days before we can pull that from your RSP or investments. Because of that, we need to make sure that it's all secure and in there ahead of time. So that's just a couple things to keep in mind. There's a down payment calculator that we offer with TD, and that will help you determine how much you need to save each month to reach your goal or to see how much of a down payment you require. So once again, we can always help with a savings plan that works for you. So like I mentioned, your down payment can come from savings, from a gift from family, first-time home buyers with an RSP. So with the RSP, you can borrow up to $35,000 tax-free from your own RSP investment. So if you have $30,000 and you'd like to pull that from your personal retirement savings, you can do that. Tax-free, interest-free. It needs to start, it needs to be withdrawn. And then when you have 2 years to start making payments to pay it back. So it's kind of just like you're paying yourself back. So you're not borrowing it, you're borrowing it from yourself, which is great. And we can help you set up yourself up with a payment to be able to pay that back within 2 years. And you have 15 years to repay the full, for example, $30,000 back. So you do have time. And once again, we're here to help you pay that money back. Other little costs with purchasing your house. There's also legal costs associated with it, land tax, land transfer tax, home inspection, and realtor fees too. So that's usually between 1.5% to 4% of extra cash you need to have available to you. And that's of the purchase price. Buying a home. So this is where I'm going to sign off, and I believe my coworker Shannon's going to take over. And like Amanda said, she's our senior financial advisor, so she is the girl to talk to about buying a home. So we'll let you take over, Shannon.
Thanks, Chantal. And I'd like to say thank you to everyone who took the time out to come and meet with us today. We greatly appreciate it. So in buying a home, a mortgage is a loan to help you buy your home. The property is the security for the loan, and mortgages can be paid off over a period of up to 30 years. And this is called the amortization period. The TD mortgage payment calculator can show you how much your monthly payments could be. Now, keep in mind that 30-year amortization applies to properties where you have put down 20% of the purchase price. For any properties where you put down less than 20%, the maximum amortization, which is under CMHC, is 25 years. So something to be very aware of. The mortgage rate is the percentage amount of interest charged on your mortgage. Typically, mortgage rates are for a term of 1 to 5 years. Essentially, there's two types of mortgage rates. One is fixed, which the interest rate doesn't change over the term. The second is variable. The interest rate can fluctuate depending on your market conditions. And it's a good note when you're a first-time home buyer to look towards the fixed option, because you're going to have a lot of startup costs, and having a mortgage that could change in payment during that period could be a negative for you. So keep that in mind. Pre-approval is when a potential mortgage lender looks at your finances and decides how much they'll lend and what interest rate they'll charge. You might end up being pre-approved for an amount greater than you can afford. So you want to create a budget and make sure you follow it, and really look at the area that you're looking to purchase and the actual property taxes and potential condo fees. Because though maybe a rule of thumb is 200 to 300, in potential areas you could be looking 6 to 7, which could really affect your budget. The TD Mortgage Affordability Calculator is a helpful way to find out how much mortgage you can afford. There is also a third piece to the approval process, and that's the residence. And a lot of people are aware of the fact that you need to be prepared that the residence may not be approved by CMHC. It's rare, but it definitely can happen. Or that the approved appraised value may not be as high as the purchase price. And this can also occur. Okay. So pre-approvals, they help you understand what homes are in your price range, and they lock in an interest rate for up to 120 days. Many realtors may want you to be pre-approved before looking at homes, and this confirms that you're eligible borrow money to buy a home. Now, when we pre-approve you, we book a fixed rate, and we can rebook it if rates go down. And by booking a rate, we can also guard against increased rates. So it gives you peace of mind that you're protected in case mortgage rates are on the rise. Okay. So depending on your mortgage, you might be able to make additional payments to pay off your mortgage sooner. These are called prepayments and could lump sum payments or increase your regular payment. Different mortgages can have different payment options. So make sure you find out what yours are when picking a mortgage. Obviously, everyone wants to pay off their mortgage as soon as they can, but there can also be prepayment penalties. So you want to check to see if there's a charge or making certain prepayments. Now at TD, you can put up to 15% of the original amount borrowed down every year in increments of any time over $100. You can do it in branch, you can do it through our phone channel, and we can even do it through EasyWeb. And you can also increase your principal and interest payment up to 100%. And you can do both of those in the same year. So it gives you a lot of options. Okay, so I'm done my part. So thank you so much, everyone. I'm going to pass you on to John, who is our mortgage sales specialist.
Thank you very much, Shannon. Thank you very much to everyone on the call today as well, and taking the time out of your busy schedules. I'll be talking to you a little bit about assembling your home buying team. Best to do this in advance if you can. And really, I'm going to drill down on these individuals, but you're looking at the mortgage specialist, the realtor, home inspection, home inspector, and a lawyer. So first of all, with regards to the mortgage specialist, a mortgage specialist is ready to help find the best mortgage for you. They can assess your overall financial picture and determine the best path forward, find you competitive rates, whether it be fixed or variable rates, and connect you to other TD specialists who can help with refinancing, lines of credit, and savings plans. I'm just going to touch on that last point. An example might be perhaps if you have some other debt, as we all do. I mean, considering a consolidation might be a great idea, looking at taking a student loan, some credit cards, lines of credit, loans, etc. Why would you do that? Well, you might do that to be able to bring all of that debt together into one. The benefits would be easing overall cash flow as you're going into buying a home, lowering your overall interest costs, of course, and actually qualifying you for a higher mortgage amount, because your mortgage is based on your debt to service ratio. And what that basically means is how much you will qualify for a mortgage is dictated by what your outgoing payments are each month. So that basically would do all of those, benefit you in all of those ways. So try to maybe look at considering that before you're going into buying a home. The realtor is a valuable partner in buying a house. They can help you, of course, find properties, get advance notice of new listings before they hit the market, and help to negotiate a purchase price and assist in completing an offer to purchase on the property. The cost of using a realtor is actually paid by the seller, not the buyer. So those commissions, many of us think that we're incurring a cost when we're buying a home, but in fact, you're not. So it makes good sense to engage yourself with a realtor. And it's an important relationship. You're going to be spending quite a bit of time with these individuals and looking at quite a few homes. So, I mean, ask friends and family for references, and even possibly interview a few of them, finding what's right and a good fit for you. What might have been a great fit for your parents or your grandparents or whomever it might be may not necessarily be the right fit for you. So, make sure there's clear expectations set from both sides, what you understand, what you expect. And like I say, yeah, find the right person that you're comfortable with and go from there. The third would be a home inspector. Home inspection is a critical part of the home buying process, typically costs about $400 to $600. This would typically happen after you've made your offer to purchase. Great idea, especially considering what we're spending on a home these days, to spend $400 to $600 to identify any issues or problems. Yes, it's money. It's very much money well spent. There's no question about that. In the event that something comes up in a home inspection, you could potentially back out of the deal altogether, or in many cases, what happens is go back to the table and try to negotiate possibly a slightly lower cost of buying the home, or just go ahead and proceed as is. So that's up to you and the seller at that point. Lastly would be the lawyer. Your real estate lawyer, and it's important to obtain a real estate lawyer, has a wide range of responsibilities. They include reviewing the offer to purchase, registering the new mortgage with lands and titles, completing the entire process, and ensuring the mortgage and down payment monies are transferred from buyer to seller. One lawyer once told me that it's quite important and not a bad idea to maybe engage in obtaining a real estate lawyer even prior to waiving your conditions. Often we buy a home and then we look at doing that after the fact, but probably better to do it before the fact. And again, going back to what we talked about earlier, getting a lawyer that you're comfortable with. And the reason why is because once you've waived your conditions, really there's not much as far as any amendments or changes that the lawyer can make at that point. So perhaps before waiving any conditions that you might have, not a bad idea to engage that lawyer, have a look over the offer itself, and then make any amendments that need to be done, if not. And they really appreciate the kind of the heads up, and then they're better prepared going in as well. Lastly, just closing the deal, finalizing the mortgage. Couple of things in this, property details are added to the mortgage. We of course submit the application, the down payment is finalized. You agree and finalize the terms, the amortization, interest rates, payment amounts. The mortgage documents are signed and then all completed and sent to the lawyer. To Chantel's point earlier, if funds are going to be coming from an RSP, it's important to start that withdrawal process under the home buyer plan well in advance of your closing date. Try not to leave it till the last minute, because it can take some banks or financial institutions a couple of weeks to process that. And as far as your mortgage documents are concerned as well, probably important to get those signed maybe 2 to 3 weeks in advance of your closing as well, or longer. So to get the documents to your lawyer, well in advance of the closing date as well. Okay. And protecting your home. Fire insurance, home insurance is going to be required in order to be able to, for the lawyer to be able to advance that mortgage on closing. So important to contact your insurance company in regards to that once you're, when you're in the process of looking at buying that home. And the bank TD offers mortgage credit protection is another insurance option to help protect your home. It helps cover mortgage payments in the event of terminal illness, loss of life, or critical illness, injury. And of course, and it is not mandatory, but very much recommended. And last screen, is there anything else? Now that you're a homeowner, pretty savings and so on and so on. Take advantage of any first-time homebuyer tax advantages or incentives. There is, depending on your income level, an Ontario tax credit that you may be eligible for. And then again, that's related to your income. Another possible strategy, and we talked about this a bit earlier, the three of us, that if you have money in a savings account that you're earmarked for the purchase of a home, and you are in fact going to be buying a home and you're actively looking at buying a home, you may want to consider moving that money into an RSP. because as a first-time home buyer, you only have one time or one option or one chance at being able to take money out of an RSP for the purchase of a home. And as long as the monies are in the RSP for at least 90 days, then you can withdraw them under the home buyer plan. So again, if money is just sitting in your checking account, sitting there idle, not doing much for you, move it into an RSP, provided that the closing date of your purchase is going to be at least 90 days or longer down the road, then you've created yourself a fairly significant tax credit that you'd be able to use for your taxes in that particular tax year. So again, you can reach out to any three of us and we can kind of go through that strategy, but might be something to consider. And that basically covers everything off. So I'll hand it back off to Shannon or Chantel. Yeah, and we can take any questions that that you may all have.
Yeah, so basically this kind of ends our presentation. Thank you everybody for attending and listening. We really appreciate you. We're happy to help here at TD, and I think that Amanda's going to link our contact information so that everybody can get in contact with us if need be. But I think we're all on LinkedIn as well, and I think that's a great avenue for people to reach out to us. I'm definitely open to that as well. So if you want a new connection, feel free to link us. Yeah, I'll lead it over to Amanda. She can introduce questions and we can kind of answer one by one.
All right, thanks Chantel, and thanks everyone. It was a great presentation and very informative. We have questions coming in already, so I'll just read them, and then whoever is best fit to answer them can do so. So what is the average down payment on a house in 2021?
I can take that one. Right now, we're looking
go ahead.
at residences around the purchase price of between about 275 to 350,000 is roughly what we're looking at. So if we looked at 300,000, your minimum would be $15,000. And then you'd want another 1.5% to 2% for closing costs. So there you're looking at about another, say, 6. So I would say want to be prepared to have approximately about 21,000 available for your minimum down payment and closing costs.
Okay, thank you. What are the benefits or incentives or grants, the freebies that a first-time home buyer can get?
So maybe I'll take that question, but basically going back, there's an Ontario property tax credit. And again, that's going to be related to your specific tax, individual tax. As far as your income is concerned, that'll dictate how much, if any, that you would you'd receive back. There is also, of course, that strategy we talked a little bit about earlier with relation to possibly moving some monies from your existing savings into an RSP. As a first-time home buyer, you only have one chance, like I was saying earlier, to obtain that to use money from your RSP as a first-time buyer. So moving money over will definitely, I highly recommend that if it's something that you're looking at, because it can turn into a $3,000, $4,000, $5,000 tax credit that you could receive in that particular tax year that you buy a home.
Okay.
John, I think we'd want to add to that as well that TD currently is offering for people who are looking to purchase, that it does have factors that you need to qualify, but you can get up from $500 to, I believe it's $2,500 right now from TD. Unfortunately, I don't have my access to the offer itself because I'm at home, but we do definitely have an offer ongoing right now. Minimum purchase price would be $150,000 on that, but TD definitely has an offer for that.
Yes, thank you. Yep.
Thanks for that information. You talk a lot about preparing to move into a house. When you're actually in the house or about to move into the house, what are the costs on average? The fridge, just the average to move into the house once you have the house.
I'll take that one. Like, it really depends, because lots of the times appliances are included in the home, which is super great. And I love that because you're just kind of set up and good to go. But it's really everybody's individual budget, what they can afford, if they want to purchase new stuff, if they need to purchase new things. But fridges can range anywhere from like $1,000 and up to $8,000 now. Like, fridges are quite pricey. My brother-in-law just purchased one, and it was, sorry about that, there's children in the background. It was $6,500 for their new fridge freezer. So it was quite pricey, but they wanted something extremely high end, and that's what they got. But once again, you can reach out to like Leon's or Reed's, that kind of thing, and they maybe can provide a package deal too with some discounts associated. But also too, like there might be some small renovation or like paint costs, that kind of thing, but it's really everybody's personal preference. I really, once again, like the idea of at least the washer and dryer kind of being included in the property, because that's a heavy, big thing to move as well. And it is nice if it's in there, and you can always negotiate with the seller. I know now though, it's really a seller's market, unfortunately. So anything extra that the buyer might want included might impede them from getting the deal. So keeping it simple is always good too. So having a little renovation budget or having an appliance cost budget kind of sitting there is also something to keep top of mind too when we talk about savings and investing.
Great. Yeah. Calling around and creating that template was a great idea. What kind of documents would we need to provide prior to first meeting with the bank?
I'll take that one.
I could,
Yeah, you
Yeah.
good with me, John? So realistically, it's
Yes.
going to depend on income, and that's going to be the biggest piece we're going to be looking at to start with is income and down payment. So generally, I request my clients to bring in their 2020 and their 2019 T4 and a current pay stub. Now, if they have direct deposit with us, then we won't require the pay stub. It's really going to be dependent on the type of income you have. If you have salaried income, well, then we can work with, again, your 2020 T4. I would bring in 2019 just to be safe and a current pay stub. If it's fluctuating, then we're going to require maybe more documentation. So in advance of the meeting, generally when we book meetings with our clients, we have our emails there. You can reach out to us and we can go through a little more detail about specifically what kind of income you have, so that I can, for example, tell you, okay, well, I'm going to need your full T1 generals as well. And then that way you're more prepared before the meeting. As for your down payment, we're going to need a 90-day history. So we're going to need a full 90 days. And I would bring the current month. So example, we're in April now. So I would want March, February, and January as long as April. And if you have any deposits that seem somewhat odd in comparison to or out of nature, so you have a sudden, say, 5,000 deposit when all the other deposits are around 1 or 2,000 or 500, we're going to want further information of where that deposit came from. So you may want to be prepared for that.
Good to know. Thanks. Can a student purchase a home if they have a 5% down payment and a few part-time jobs to show income?
okay, I
Yeah.
can take that one.
Oh, go ahead, John. Go ahead.
The answer, okay. I mean, the answer is yes, and I have done mortgages for many students. That being said, of course, just like any application, what we would typically do is take the collective amount of your part-time income, and like Shannon was saying, we might average out your last couple of years. So if you've been working in these part-time positions for a couple of years, this is very common actually. We see it a lot in locally where individuals will work contracts or they'll work part-time or seasonal or what have you. So we generally, as long as they've been in the same line of work and they've been with the same employers for the last few years, we could typically average out the last couple of years and approach it in that sense. Now, in cases where, can a student buy a home and maybe if they're just working a part-time position and maybe the income isn't quite enough to be able to buy something, then we might ask for a co-applicant to further strengthen. So a parent or a grandparent or aunt and uncle could also come on title and go onto the mortgage with you. And then of course their income can also be incorporated to put you in that position to buy a home.
Perfect. Good answer. Does purchasing a home with an apartment affect the mortgage you can be approved for?
I'll take that one. It depends on what you're utilizing the apartment for. If you can purchase the home outright based on your income without any need for the rental income that you're looking to potentially acquire, then it's not going to have an impact. However, if your ability to purchase that property and the funds you need to support it through your income is going to be dependent on having that rental property in place and utilizing that rental property, we're going to need additional information. We're going to need a lease agreement. We're going to need a stated date when they're going to get into the property, and we're only going to use 50% of that rental income. So don't expect that we're going to be able to use 100 because it won't be utilized. So if you can essentially buy the property without need of rental income to be able to purchase it, you're better off, because then we know that you can easily qualify and support that property on its own. But it won't change the purchase of the property. Again, the only way it's going to come into play is if you're going to require the rental income for your purchase.
Okay, thank you. We'll take one more question and then we'll let everybody know who they can contact, which will also be emailed out as soon as we can with the presentation as well. So the final one is there a higher interest rate for CMHC mortgages?
I could take that one as well. So actually, no, there is not. Conventional mortgages are basically 20% or more down, and then CMHC or insured mortgages, because there are 3 different insurers in Canada, are less than 20% down. And formerly, the rates were the same for CMHC, or sorry, insured mortgages or conventional mortgages. But in fact, insured mortgages we offer, and most all lenders offer a lower rate, slightly lower, about 10 basis points. So it'll be about 0.1% less on an insured mortgage, because it's essentially government guaranteed, than a conventional mortgage.
Okay, thank you. So thank you everyone for the presentation. It was fabulous. We will be emailing out this presentation to all the participants within 48 hours, as well as we're hoping that you guys can all fill out a survey that will be attached with it. And if you have any more questions, we will give you the contact of John, and then he will forward it off to the appropriate person. So once again, thank you so much for all the participants for attending. We really appreciate it.